Business and investment. I want to welcome each and every one of you here. As some of you may know, this is the first time in the Milken Institute's history that they've had a whole track, a whole separate track just devoted to Africa. It's a tremendous change. They should be greatly complimented for that. To show you the enthusiasm and excitement, at 7 a.m. this morning, there was a panel on Africa, and it was standing room only. So that's a real indication to get all of us up at 7, to be there at 7 o'clock in the morning. The final session, as you know, will also be devoted entirely to Africa. We will have a fellow by the name of Bill Gates, who will be talking about Africa, Tony Blair. We have a representative from one of the oil companies. And also, for the first time in the Milken's history, we will have a sitting head of state, Paul Kagame, from Rwanda, will also be participating in that final session. This is a really important subject, and we have a perfect panel to address this important subject this afternoon, this morning. So we're not going to be at 30,000 feet, and we're not going to be down in the weeds. We're going to aim for that middle ground of really practical considerations about how to do business in Africa. My name is Ernest Wilson. I'm the Dean of the Annenberg School for Communication and Journalism at the University of Southern California. In a previous life, I've worked at the White House on the National Security Council on Africa. I've worked as a congressional staffer on Capitol Hill on Africa. I've taught on Africa. I've researched. In other words, I can't keep a job. Is either that or attention deficit disorder. But I always come back to a focus on Africa, which has 6 of the fastest growing countries in the world, as you know. I will not introduce the panelists in detail because you have their bios already in your book. And so I will not proceed that way. But we'll jump right into it. Unfortunately, we only have an hour for a very large continent and a great deal of expertise on the panel. And I should say about the expertise, we have both a diversity of sectoral knowledge, from banking to power and other sectors, and also a great diversity of geographic knowledge. So without further ado, I'm going to ask each of our panelists to take 3 to 5 minutes and tell us what are the challenges and opportunities that they see in Africa from their unique perspective, and how did they address one of those challenges or opportunities. So we get really concrete in this panel. So why don't we move from right to left, and I'm going to ask Paul to start off. And he's also, in addition to his work in the power sector, he's also the chairman of the Corporate Council on Africa. And I hope you'll tell us something about that too.
Well, I will, yeah. Morning, afternoon, everybody. Morning, everybody. Sorry, I was up at 7 o'clock this morning too. First, my name's Paul Hinks. I'm the chief executive of a US company, Symbian Power. We're based in Washington, D.C. We've been investing in Africa since 2010, although I personally have a history in Africa going back to 1980, when I first went out to work there. Since 1980 till now, I've worked in about 17, 18 different countries. So I've got a fairly broad experience. And of course, 30 years ago, or even 20 years ago, Africa was a very, very different place to what it is we see there today. Now, since 2010 and Symbian went to Africa, we first went there as a contractor working on US government projects financed by the Millennium Challenge Corporation, which is a US government State Department agency like USAID. So we went there for that. We then decided to invest in the independent power business, and we acquired a power plant that was a frustrated deal in Tanzania. We've now got 3 power plants in Tanzania. We've moved to Nigeria. We've recently, almost completed the acquisition in a privatization program there of a 972 megawatt power plant. We've acquired a company in South Africa, and we're going to be going into the independent power business in South Africa. Plus, we have a few other countries where we're prospecting at the moment, such as Malawi, for other types of business. Now, the one thing that I would like to tell you is that you ask about challenges. The one thing that everybody talks to me about doing business in Africa is corruption, a big elephant in the room. How do you get business in Africa if you're not prepared to be corrupt? Honestly, what we've done is we've devoted a huge component of our business to local capacity building, training people, and doing social impact things. We're running our own school, educational facility in a place called Dodoma in Tanzania. We're building a small soccer stadium in Dar es Salaam. And we're doing things like that. And what we've found is that we haven't been approached for corruption. People see us as, first of all, they see us as an American company and they say, leave them alone. We're not allowed to ask those Americans for bribes. Everywhere we've been, we've seen the same thing. Nigeria. For 30 years, I wouldn't go near Nigeria. I thought it was the most corrupt place in Africa and perhaps one of the most corrupt places on the planet. I started going to Nigeria 2011, which is less than 2 years ago, and we've already completed one transaction. We've got fabulous partners there, a company called Transcorp Energy and another firm called Hares Holdings. And what I've seen in Nigeria is probably the most amazing talent anybody can ever imagine. In fact, we have Sam Nwanzi, who's on the panel with us here. He will tell you more about the talent that is available in Nigeria. And a lot of the people in Nigeria that we're doing business with, these are guys that were at investment bankers and hedge funds and private equity funds and things like this in the United States before they went back to work in Africa. So our experience has been, it is no different doing business with those guys than it is in doing business with other Europeans or Americans or the like. So the myth, and it really is a myth, that Nigeria is this incredibly corrupt country that you can never do business in is, in my view, hogwash. There is corruption, of course, there is corruption. But our experience, and I'm speaking for the power sector, is it is not like that at all. And quickly, I'll just tell you about the Corporate Council in Africa, for which I'm the chairman, is the largest trade hub for trade and investment between the United States and Africa. It is primarily American companies at the moment. We've recently, in January, started to take on companies from Africa, and we started to put companies from Africa's leaders on the board of CCA. I've had a great deal of benefit out of being a member of CCA during our few years of trying to do business there. I had so many introductions that I could never have achieved, even with my 30 years in Africa. They opened doors for me that were, I couldn't have done it myself. So if you're interested at looking at CCA and you're interested in doing business in Africa, CCA is a really good gateway to Africa. It's a great information hub, and it has got a lot of pull to get good connections.
Okay, good, thank you. I'm going to ask Jay Ireland to say a few words. I should say that, and Jay, you can correct me if I'm wrong, but I understand that your position has been recently created as head of the continent of Africa, business for General Electric on the continent of Africa, which I think points to the importance that a large American company assigns now to Africa.
Well, good morning, everybody. As I will say, I run GE Africa. I'm located in Nairobi, Kenya. We put the headquarters there 2 years ago. About 2.5 years ago, Jeff Immelt, our CEO, and the board decided to put a lot more focus on developing areas of the world. So there's 10 senior, I've been with GE for 33 years, sometimes you could say it's as hard as navigating Africa as it is in GE for that long. But I've been in the company a long time, and they put 10 senior people in developing it, you know, ASEAN, China, India, Africa, Latin America, Mideast, and North Africa, and to really put a focus on the businesses that are there and really shift the center of gravity, if you will, of our company out of U.S., Europe, and into the developing world. So we've been in Africa since 1898 as a company. You probably wouldn't know that if you went up, you know, we were in South Africa, but we really became heavily invested when we got into the oil and gas business, equipment business, back in late 90s, early 2000s with a company called Vetco Gray, and subsequently we built off that. So in the last 2 years, we've doubled our employment, local employment. Our orders have gone from about 1 billion up to 3 billion, and our revenues are increasing around 20% a year. So it's a tremendous place and tremendous opportunity. I'm not going to quote all the statistics of what's out there. Everyone understands that, I think. I think the key thing is that's different in Africa than the rest of the world is two things. One is Africa is, I'm responsible for sub-Saharan Africa. We put the 5 North African countries within Mideast, but there's 48 countries. So every country is different. There are regional groups, East African Community, SADC, ECOWAS in the West, et cetera, that you work with and work through, which is helpful, and their those regional activities are getting stronger and stronger. There's power pools that transfer power, transfer gas between countries, so that's very good as well. But I think as you look at Africa and think about what you do, the hardest thing is you have to bring solutions. The best thing that we would like to do is sell a turbine, an aircraft engine, a locomotive, healthcare equipment. Sell it, get paid, have a service contract, and then we're okay. In Africa, it doesn't work quite that way. And that's one of the harder things internally, is making sure all of the people that are sitting in the U.S. understand that it's a little different than selling to Duke Power or to Con Ed. And I think what you have to do is bring a solution, a package of financing, potentially an engineering company for some project development, and then a number of other potential consultings around, depending on what the business is. So I think that's one of the big changes. And there's ways to do it, and it's just working with the governments. Most of the stuff that we do in infrastructure is tied to a government entity, whether it's a parastatal or the Ministry of Health, Energy, et cetera, and working with them in attacking what they need to do to fix their infrastructure. So I think, you know, we're working, Minister of Finance from Ghana, in Ghana with the Western Rail Project, looking at a consortium and bringing things in. So it's a different view of going at things from a standpoint of what we normally do. We are in the large infrastructure projects, which tend to be big dollars and require a lot of financing. So this conference is wrapped around capital and movement of capital, and I would say that the key thing is understanding the risk, working with partners, and making sure that you develop the relationships and be on the ground. Don't try to invest sitting in, you know, I run into a lot of companies that are investing in Africa, and where are you located? London. Well, why in London? Well, it's easier to get to everywhere than being in Africa. Well, it's still an 8-hour plane ride. And I said, would you cover Chicago from London? No. I said, well, why are you sitting in London and trying to cover Kenya or South Africa or Nigeria? And I think that's the dynamic. Or people put a lot of people in Dubai, which is another place. And that's still a 4 to 7 hour plane ride, depending on where you're going. So I think it's feet on the ground, understanding the local culture, how to do business, and then, of course, working and developing partners and solutions.
Good. Thank you, Jay. Sam Nwanze, you've had a very distinguished career in banking and finance, and I wonder if you could share your experiences and challenges and opportunities that you've seen in Nigeria and other countries.
Okay, thanks. My name is Sam, and thanks for the opportunity to speak at this conference. A friend of mine sent me a message on social media to say that this is the first time that we're having an Africa track at the Milken Institute, and I'm one of the first Africans to be on it. So it's a rare privilege. I just wanted to, I'll try and touch on, give a little bit background, give an angle on Africa that most people don't normally talk about, and then I'll talk about the things that I think are some of the challenges that we see and I see as an African investor, and talk about some and give an example of something that we've done. We obviously have partners. We are partners with Symbion on things we are doing in power. We also have investments in other areas. The organization I work for, Hairs Holdings, we do long-term investments across Africa, and we focus on key sectors that not only would generate a return for our investors, but would also create some kind of social impact. One thing I wanted to mention about Africa is most times when you look at the statistics on Africa, and we've heard a lot of that during the course of this conference, there's an aspect of the African economy that most people don't normally hear about, and that's the informal economy. In the UK, the informal economy is about 7% of GDP. In the US, I think it's somewhere around 8%. In Japan, it's around 6%. In Africa, it's around 60 to 70%. And depending on which statistics you're looking at, some people argue that it is well over 100% of the existing GDP. This is a whole set of activity that is going on that is not captured in the normal data and statistics that you would see. And it just gives you a sense of, even though we are talking about growth in Africa, most of the things that I've read have said that the growth in the formal economy is also quite large. And what is happening in Africa is we are beginning to see a pipe linking what you call the formal economy and the informal economy together. And it's creating this wave of activity and opportunities that seems to be moving all around the continent. However, some of the challenges that I think we as a continent face is, and I think is one of the things that I'm so happy that the Milken Institute is doing here is, I think there needs to be a mind shift in the minds of international investors. And I was trained, I did my master's in the UK, I worked a bit, I have a sense of how international investors think. And my experience has been mainly on the continent doing investments, not only in Nigeria, but in other parts of Africa. And I think there needs to be a mind shift in the way we look at Africa. One of the things you find is, despite all the buzz about, Africa, wonderful things taking place there, you're actually seeing very little activity in terms of actual money that is being put into the continent. And it's simply because the definition of risk in the international, as far as the international investor is concerned, has to be looked at again when you're looking at Africa. There's a sense that even though we know, at the periphery, that a number of things are taking place on the continent, the risk appetite of the investor has not quite shifted from the traditional model that you have in the international market. To do business in Africa or to invest in Africa, you have to do it completely differently, from the way you do it in other markets. You cannot, and I think if we begin to shift our minds from always seeing this continent as, of seeing the African continent as the continent that was way behind and is, beginning to blossom, and we begin to see it as a land of opportunities where there's a lot of change taking place, and we begin to embrace and look for models that helps us to address the kind of risk we face on the continent, we will see a lot more activity. If you look at the public sector, just this morning I was at the session we had at 7 a.m. and just listening to the Minister of Finance in Ghana, and sometimes when I listen to some of our government officials in Nigeria and places we have done business in Rwanda, in Tanzania, you find that you have forward-thinking policymakers, people who not the kind of policymakers we had in Africa, you know, in the 60s or the 70s, but people who are well informed and have fantastic ideas that are transforming the way the continent is evolving. And then if you move to the private sector, there are businesses in Africa that are doing extremely well. You have people who are running these businesses and have started these businesses in an environment where environments that we would call you know, difficult for businesses to thrive, but they've taken these businesses to very high levels. A good example is my chairman, who took a bank that was based in Nigeria with about less than 100, about 100 branches and about maybe 200,000 customers. In 5 years, took it to 19 African countries with 7 million customers and over 700 branches. Those are, and without any form of, you know, international capital or training, all homegrown talent. So there is an active private sector and a very focused, in my view, in many countries, public sector. And so the view that we have of Africa really needs to change. So that's one of the big challenges. There's a need for a shift in the mindset. The other thing I would like to raise is issue around management talent. If you look at Africa, there's a lot of aid and you know, philanthropic money that is thrown at Africa to help develop different sectors, the health sector or different areas where we feel there are challenges. But there's very little investment or involvement in developing management talent. So we have training for I mean, money to build, you know, doctors or to help engineers and all of that. But there's very little investment going into developing the management pool. And it's the management pool that would run businesses that we are going to invest in and take the businesses to another level. So this is another area that needs to be looked at. A third thing which I'd like to talk about, which I'll also relate to, and the opportunity, it relates to finding a local partner. If you're going to do, and it's not new, if you're doing business in any geography across the world, you have to have people on the ground that understand the way the system works and can help you navigate through that space. We did an investment last year, an investment we have been working on for a while. We had a meeting, we met with a US-based investor who had discussions with a couple of African governments to set up commodities exchanges across Africa. And at the time when they looked at that investment opportunity, they saw it more as a you know, an impact investment, if you like a social investment, you know, trying to do good for the farmers, to create a price discovery mechanism where, you know, farmers can get good prices for their trades. And that investment, as it was initially structured, was an investment that wasn't going to provide commercial-based return. And one of the things they did was they met with our group and we got into partnership. And as a result of our partnership with this group, we were able to have interactions that helped to restructure the way that deal was done. And it transformed from being just an investment that had zero or very low return to something that was very commercially viable because of the local knowledge that we could bring to the table and the kind of relationships that we could bring to bear to make sure that those things work. So that is an important aspect that you need to consider as you look at the continent, which is to find good, credible partners that can share risk and that can help you better understand the way the continent works.
Thank you very much, Mr. Nwanze. Mr. Shankar, you bring a unique perspective because you have responsibilities not only for Africa, but Europe and the Middle East and the Americas. And you also have a unique perspective because Standard Chartered Bank has been there, I think, for 1,500 years. You've been there for a while.
As old as me, yeah. First, a quick thing on Standard Chartered. We've been in Africa for 150 years. It's a thriving business. It's one of our fastest growing. Over the last 5 years, our top line has grown at 19% CAGR and our bottom line at 25% CAGR. It generated about $1.6 billion top line last year and a bottom line of close to $650 million. So it's a business which is a crown in our jewel. We have about 7,000 people. We do wholesale banking, consumer banking, private equity investing. In fact, in terms of league tables, we'd be number one in mergers and acquisitions, number one in fundraising for companies, and so on. Now, when we look at the opportunity in Africa, we look at it through several lenses. One is the pattern of trade and investment flows into Africa are changing. Today, 50% of the trade with Africa is done with other emerging markets of Asia, Middle East, Latin America. And that plays to our advantage because Standard Chartered as a bank is very much focused on Asia, Africa, and the Middle East. So it plays to our advantage. So that explains our success. But if I were to just step back from Standard Chartered and look at what is the opportunity that all of us as banks, as investors, as anybody interested in Africa should be looking at, to me, there are four things. One is the African consumer. Last year, it's estimated that the African consumer spent close to $1 trillion. That's a bigger consumer market than India. Admittedly, it's over 54 countries, but it's a bigger consumer market than India. You look at and what explains that is also the demographics of Africa. By 2035, Africa will have more people of a working age population than either China or India. It is a very fertile ground for consumer growth. Just take a company like MTN of South Africa, which is one of the world's today largest mobile telephony players. 15 years ago, it virtually didn't exist. Today, it has a market cap of $32 billion. That, to me, is exhibit number one in terms of the size of the African consumer market. Second area I would focus on in Africa is the infrastructure. If you take Africa, it's unique in that only 15% of African trade is intra-Africa. The same number for Asia would be close to 50%. The reason why intra-Africa trade is not growing is because of the lack of infrastructure. To me, it's a huge opportunity. Today, Africa spends close to $30 billion in infrastructure development. It is estimated that number needs to go to $100 billion a year over the next several decades. It's a huge opportunity. Just take a few things. The total amount of installed power capacity in Nigeria, with a population of over 160 million people, is less than the installed power capacity than the island state of Singapore has, with 5 million people. It is quicker and cheaper to ship a car from Paris to Lagos than from Accra to Lagos. The flight, 90-minute flight from Uganda to Tanzania costs more than the 7.5-hour flight from Kenya to Dubai. But here is the opportunity. Again, take a company like Dangote Cement. Here is a homegrown entrepreneur from Nigeria, today producing 20 million tons of cement. His market cap is close to $18 billion. And I would not be surprised that based on his expansion plans just on the continent of Africa, this will be close to well over $50 billion in 5 years' time.
Yeah.
Here is somebody who's tapped into the growth of Africa, whose demand is growing at more than 20% per annum. So consumer, infrastructure, agriculture. 60% of the world's uncultivated arable land is in Africa. And if you were to just extrapolate, the food consumption in the world has to increase by 75% over the next 20 years, 30 years. Africa has to play a major role in terms of agriculture. And I won't touch on resources because everybody talks about African resources. But what are the challenges we face in Africa running businesses? One is skills. And I think it's got a lot to do with African education, where I think African education policy has to steer a lot more towards employability rather than learning Shakespeare and poetry. The second is it is not a cheap place to do business. Rents in Angola are far higher than Midtown Manhattan. Infrastructure is lacking. For us to roll out 100 branches in Hong Kong or Singapore is not a problem. For us to roll out 100 branches, new branches in Nigeria is a problem in terms of getting the right infrastructure and the right location. Scale is an issue because Africa perceptually as a continent has got the scale, but in each individual market may lack the scale, but that is probably being addressed through the free trade treaties and the regional groupings that are now emerging. And last but not the least, the big challenge you find in Africa is elasticity, inelasticity of demand. Good example of that is the Indian company Bharti Airtel, whom we advised taking them into Africa. They bought Zain. They tried to take their Indian model where you drop the pricing, the number of minutes goes up, and you end up making more money. Unfortunately, in Africa, if you drop the pricing, people don't talk more. They just take that money and spend it probably on beer or something else. So it doesn't happen. If you were to just look at 150 years of history in Africa and what are some of the lessons, one is patience. The people at Standard Chartered who decided to go into the 15 sub-Saharan countries that we are now in were probably 150 years too early, but not a day too late. The second is we need to differentiate. There is no one Africa. I mean, doing business in Uganda is different from Tanzania, is different from Kenya, even though they are all neighbors. Third, most important, as Sam said, is local talent. Barring one, each one of my 15 CEOs in Africa is African. 28 of my 30 management committee members in Africa are African. It is very important to have a local talent. The other point I would make, which we have learned the hard way in Africa, is all the management nonsense you read about think global, act local doesn't work. You got to think local, act global. So we could be, as Standard Chartered, selling a lot of life insurance products globally, but in Africa, a lot of places what sells is funeral insurance. So the ability to adapt your models and think locally, I think, is very important. M-Pesa, which again people talked about, which is about the money transfer system in Kenya, is a good example of frugal innovation. Because I think a lot of Western companies, when they go into emerging markets, they want to come in with the gold-plated stuff. What you really want is something which attacks the massive base of consumers you have at the bottom and the middle of the pyramid. So I think it's very important to think local and act global. I'll stop there.
Mr. Shanker, thank you very much. Minister Turkpur, you represent the public sector on the panel, and we've heard about a number of changes that have been taking place not only in Ghana but around the continent in terms of the attitude of government toward the private sector. Are those exaggerations or are they true?
Yeah, thank you very much. There are no exaggeration at all, and I just wish to remind the audience that there have been multinational corporations in Africa, from Europe in particular, spanning the colonial era, and they still have a presence in Africa. Sometimes the name changes. So the question is, why haven't they left, all this while, even in a difficult environment? But in saying that this is for real, and recently we've had, businesses like I think the private sector has spoken for itself. But in terms of challenges, I like to address what governments can do, the challenges. And I see, let me address three. There are several, but just three. First, the macroeconomy, managing the macroeconomy, and letting it benefit the microeconomy, which is where the private sector operates. And then Africa needs to, manage the transition that is currently taking place, because part of that transition is a result of, the flow of capital as a result of the global financial crisis. Will that, capital stay, after the crisis, after Europe has recovered, after the US has recovered? So Africa needs to manage, so that it has this flow. And then also the third element is, how does Africa tell its story? And let me compliment, Milken Institute, for this initiative. But on the first one, I said this morning that the African growth and the African performance is not a 5-year thing. It actually, in recent times, it started with the oil crisis, which engulfed, the globe. And whereas the emphasis was more on Latin America and Asia, Africa was going through its own version of the Washington Consensus. And so we had to do things like economic recovery programs, structural adjustment programs. And Africa actually had to do a wave of privatizations, which led to, the role of governments, being reduced and more of the private sector energy showing. So if you take Ghana, for example, the telecom story, from MTN to Airtel, I tell the story that I used to be the coordinator when we introduced the VAT, and it took me 2 months, to get a cell phone, piece and a chip. Today is given for free because of the competition, but let me just say that, when you drop the price, please don't just look at profit. Improve the service, because part of the problem that we are seeing is that, services, businesses are still interested in just the profit, sorry to say, but they are not looking at, and so if you drop the price, I shrug, I take advantage, but I say, so what? So I think we need more competition. But the macroeconomic issue I'm addressing, which started, back then, is part of what, is benefiting, Africa now. To tell Ghana's story, as I said this morning, prior to 1984, when Ghana did its major structural adjustment program, we used to have, through the coup d'etat days, very volatile growth rates, sometimes negative growth rates. Ghana has not experienced negative growth. It has grown at 4 to 5% since 1984. And if you do the graph, you just see it going up, and today it's around 8%. So in as much as, the last 5 years, resources, there has been additional resources by way of energy. There is an underlying fundamental. But Africa also needs to manage, particularly its deficits, and its debt situation. And it is in the debt area, where I cited an example. The measurement of Africa's debt, need to change, and governments can take that initiative. I cited an example this morning where we get a loan, $3 billion, US dollars. Yes, it's large by Ghanaian standards, to develop the infrastructure. And that is because we also want to move out of the experience of gold. We want to move away from the experience of bauxite and add value. And so we want to build gas infrastructure. We've spoken about power. And half of that amount, goes into gas that will produce power for industry. And Ghana exports power has been exporting power for a very long time because of the Akoso model. Yet we put the entire $3 billion as public debt. And therefore, I get, Fitch, giving me a negative outlook. When in actual fact, these $3 billion, the gas processing plant alone, it has been estimated, and by no less an institution than the World Bank, that the gas processing plant alone can pay for the entire $3 billion facility within 4 to 5 years. So why should we? Why hasn't Ghana put this in a self-financing, project financing model, and then take it off with an escrow mechanism so that its debt burden will not be seen as high. And that improves efficiency, not just of the private sector. And if the public sector, if the public sector is not efficient, why not try an SPV? Why not joint venture, PPP, to make sure that this, so the management of the macroeconomy in very smart ways, I think, is a major challenge, for African countries. And if you consider that the commitment of $3 billion out of, 18 billion, reduces my external debt immediately to 15 billion, it gives me room, for building other infrastructure, roads, all over West Africa. We can build highways that can pay for itself through, toll roads, and the rest. The journey from Accra to Lagos can pay for itself. The journey from, Accra to Cote d'Ivoire through a highway. And so these are opportunities, with financing packages which can be, exploited, by joint venture between private, and public. All this used to be done by government, and governments need to manage, its balance sheet very well to minimize the volatility. Let me also state that I address the issue of the transition, and I said that Africa has benefited from some of the, challenges that the global economy is seeing, but also the BRICS have opened up competition, for Africa. And people ask me, why do you go, to China? It's not a colonial thing. It's competitive. Because why shouldn't I go to CDB, which today lends money more than the World Bank, and which is in Western economies? Why shouldn't I go to Benendez, Brazil? Or why not India Exim, Turkey Exim? They are providing me with very competitive, loans. Yes, I do want to be careful that I don't go through, another, debt situation or another, colonial pattern. And if I can also change the model, for example, which is again something which governments, African governments needs to, to think about. Instead of collateralizing against one institution, could I put the revenue aside, collateralize against a pool of funds, an infra fund, sovereign wealth fund type, for the entire market, so that I don't get tied with all the conditions and conditionalities to one institution, to one banking institution. Could I therefore do more general, bonds with longer tenor to tackle the infrastructure problems? These are some of the thinking, that is going on, with around the country. It has been said, and that is the third challenge, how does Africa tell its story? It's been said that Africa is a country of 54, it's a continent of 54 countries. Perhaps, we need a league table, to indicate, the good performance and whatever. But even, within this, it has been said that Africa has regional blocks that are increasingly becoming free markets. ECOWAS is a free market. My passport to the US is actually issued by ECOWAS. ECA has developed more than ECOWAS. That's the East African community. We have SADC. We have, others. And so I think it's also important to see a regional context to development, both in terms of infrastructure, in terms of, services. And the Ghana story is often, to give an example, is often in terms of resources. But recently I had, a query from a firm, in Ghana as to how to treat the capital allowances. And that is because the equipment they brought for Ghana was now going to be used and moved, between Nigeria, Equatorial Guinea, Angola. That is a regional natural resource market. It is not one. And businesses are beginning to see these linkages. And you can go further, around the continent to Tanzania and others. So, and the same way I had inquiries about, what to do, with an potential oil services, port, if it is built in Accra. And that is because for all the oil, services that are taken, either you go all the way down to South Africa, up to Europe, or across to Brazil. So businesses, government needs to think, with businesses and make it, easy, for that investment. And that is the way, these are some of the ways in which what I said in terms of the current transition, and when Europe recovers, when the US recovers, these are some of these, I believe, smart ways in which we can retain, part of the investments, that are flowing. But let me pose a last question, and probably it's a challenge. It has been said that capital, does not flow to Africa. And I asked recently, a mission that was in Ghana, has anybody quantified the investments that has taken place in Ghana, Equatorial Guinea, Angola, Nigeria? Nigeria is even, old. The oil fields in the last 5 years. And where is that capital coming from? This is where I say Africa needs to tell its story. It's true that I may not be getting capital, for, say, infrastructure. But the private sector is taking the lead. The international finance is not coming to me for government guarantee in investing. They're only coming for licenses to develop blocks. And so maybe when this is quantified, we would be telling a different story, about, financing that has flowed to Africa over the last decade.
Thank you very much, Mr. Minister. I want to open it up to questions, but I want to ask one One final question from myself to the panelists, and you have 60 seconds to respond. Someone said there's an elephant in the room, that's corruption. There's also